AMD stock popped almost 12% today, and investors are left wondering, why did AMD stock go up? Well, there was some huge news released on AMD, and if you're a current investor in AMD or you're considering investing in AMD, you definitely want to stick around for this whole video. So Google just announced this brand new cloud gaming platform that they call Stadia. Now this platform is going to run on Google Cloud, and it's powered by custom GPUs from AMD, meaning this is a huge win for AMD in the data center segment. And there's also huge talk around Stadia and the potential that this has, and how this could change potentially the future of gaming. And if this thesis and if this prediction does come true and they do achieve their full potential, AMD is going to be one of those companies that benefits directly from this. The reason being, of course, that Google will want to keep increasing the data center space if this is successful, and as a result they're going to be purchasing more AMD chips. So let's actually spend a few minutes to understand Stadia and actually understand why this may be something so big, not only for Google but for AMD as well. So Stadia will actually allow users to stream games on a wide variety of devices, with the games themselves being run on servers in Google's data center. The idea here is to make graphically intensive games playable without expensive hardware like gaming consoles or high-end PC components. So really, in a nutshell, the idea behind this whole release is to allow any and everyone to play the latest and greatest games no matter how intensive the graphics are, because all of that processing is done in the back end on Google's data center on AMD chips, and the end user can use any device that they want to play this game as long as they have a good internet connection. So this really removes the hardware bottleneck for consumers. But when you look at hardware in general, this is only the beginning for hardware requirements on a data center side. So instead of consumers going out there and spending thousands of dollars to build the perfect gaming PC, which only gets obsolete a few years later when even higher end games come out and it doesn't run as well on this PC, this issue is solved because now the data center is always going to be able to upgrade whenever they need to make sure that the latest and greatest 8K games, for example, can run flawlessly. And this is going to be a recurring revenue for AMD if it's successful, because sure, Google right now is going to purchase some chips, but in a few years from now, if games get even more high definition and require more resources, then Google's actually going to have to purchase even newer chips from AMD, and the cycle will just keep continuing, in my opinion. The only key here, of course, which is going to make a big difference, is that the relationship between Google and AMD has to stay pretty strong, because if for whatever reason the AMD chips don't perform or there's some disagreement between the two companies, Google is most likely going to look at another provider to fill this gap. Now, if you're a gamer and you play either the Sony consoles or the Microsoft consoles, you're probably wondering, how does this new cloud streaming platform compare to a traditional gaming console? Well, the custom GPU is actually based on AMD's Vega architecture and provides 10.7 teraflops of raw computing power. This is in comparison to 4.2 teraflops for the PS4 Pro and 6.0 teraflops for the Xbox One X, both consoles being the current flagships for each manufacturer. But the ironic thing is that even these two consoles have AMD chips in them. It's just that the chips that is going to be used for Google Cloud here will actually be newer architecture, and as a result perform better as well. And the reason that AMD is able to do this and provide even higher end chips to data centers here is because companies are typically willing to pay a premium for these products, higher end, more efficient with resources and power and all that stuff. Whereas consumers are not as concerned on that, they're more concerned on the price point. So AMD had to really find a balance for consumers, which they did, and now they found a balance for companies as well. That being said though, there's still a lot of information we don't know about Stadia. We don't know the pricing, we don't know when it's going to be released. So there's still a lot up in the air here for this platform. Okay, so now that you understand the value of this announcement, you can kind of start to see the potential that AMD has here if this plays out like expected. So cryptocurrencies helped out AMD in 2017 and even a bit in 2018. And just like Nvidia, ever since that boom kind of phased out, they have to now go back to their roots, focus on data centers, focus on graphics chips, which is what both companies are currently doing. AMD has really been the underdog in the graphics space and the data center space. It's been no secret really. But this deal here with Google kind of puts them on the radar, and it will definitely grab the attention of Nvidia, because this would have been a deal that Nvidia would have definitely wanted to win. And I'm sure in the future that if these chips of AMD's don't perform as well as Google's expecting, Nvidia will come in and try to swoop up that business. Now, another thing to keep in mind is that other manufacturers like Sony and Microsoft may also build out a similar platform here for cloud gaming and cloud gaming computing. And if that's the case, then maybe AMD will win those contracts as well, and it'll be even more revenue for the company. Okay, so now let's take a look at the charts here for AMD, and we can see here on the weekly, the stock has been doing great recently. We spiked back in 2018, getting close to $35 per share, but have since come down, and after this 12% move, we sit at around $26 per share. We are still well above all of our moving averages, and what I do like is that we held the uptrend support here as well. This implies that buyers do find value in the stock at these prices. Now keep in mind, back in 2000 and 2006, AMD did hit higher prices with its all-time high at nearly $50 per share. So there's still a long way to go for the stock to get near those highs once again. But can AMD get there? It's possible, but current valuations is a bit worrying. AMD is at a current PE of around 72, where its closest competitor, Nvidia, is at a PE of around 28. AMD also has an okay balance sheet, which is nowhere near as good as Nvidia's. If you look here, when we compare the cash and cash equivalents to the debt load, we actually end up with more debt than cash by around $36 million. It's not a huge deal, but it does mean that they won't have as much capital to spend on acquisitions and innovation like Nvidia does. Also, Nvidia recently announced that they will be purchasing Mellanox, which is another data center company, for around $6.8 billion. And even if AMD wanted to, they wouldn't have had the luxury here to make an acquisition like this. And honestly, with this new deal, which has sent Nvidia stock rallying in the last week or so, AMD shareholders should be worried that Nvidia may partner with a competitor to Google to launch a competitor here to Stadia. But right now, that's all hearsay, that's all speculation, and all we know right now is that AMD and Google are in a partnership. If you're an AMD shareholder, let me know your thoughts in the comment section down below on this deal. And if you're not an AMD shareholder, let me know what you think about this whole Stadia revolution and if this would be the future of gaming. Also, if you're new here, consider subscribing, and if you haven't already, check out the video up here where I cover Nvidia and why I think it may actually be a better investment here than AMD. Thank you for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one.